Hi folks, George DeSantis here with a look at the market for the week ending December 4th, 2015. So let's begin looking at some charts. First one being the monthly chart of the S&P 500. The first thing we should note here is that the Kalman filter yellow line crossed above the instantaneous trend line, that blue line. We should also note that in spite of the fact that there have only been a few trading days so far in the month of December, we've closed at close to the high of the month's bar anyway. On MACD, we find that we continue to have a shortening of the histogram, meaning that bears are getting weaker, bulls are getting stronger. And at the bottom of the chart, the Elder Force Index, the 13-day Elder Force Index, is still above the zero line, and that is also very bullish. So let's take a look at the weekly chart of the S&P 500. Notice that back in the early part of October, the Kalman filter crossed above the instantaneous trend line, and since then it's remained there. The candlestick patterns now, we're faced with two dojis, very much a hanging man, last week in particular, and that's bearish. So that's one of the few bearish things on this chart, indications on this chart. Probably because we are bumping up against the 2100 resistance level here. And later on, once we get through that, if we do, we have the 2134 resistance level of back in May, early May. Now, the parabolic yellow dot is still below the most recent bar, and that's indicating that there is no indication to reverse the trend to a downtrend at this time, not on this chart anyway. RSI 12 is above the 50% line, and it's sort of lining, indicating what we saw on the price bars. MACD continues to trend up, and that's bullish. And also percent R is above the 80% line, so that indicates that there is a fair amount of momentum to this market on the upside. So let's look at the daily chart of the S&P 500. The first thing I would note is that the Kalman filter was above the instantaneous trend line, indicating the trend is up. And on Thursday, it briefly fell below it. On Friday, it resumed its position above it, with this very bullish green reversal candle on Friday. As we all know, market was up over 300 points. The parabolic yellow dot is below the most recent price bar, so there is no indication to reverse the direction of the trend here. Trend is still up. The Jerry Appel sum of the rate of change indicator is below the 4% line. We can't take any positions on that. MACD, although there isn't a classic bullish divergence, we can note that bears are losing strength here, because as the market made this low, bears were not able to pull this market down as much as they did earlier. And so there is this bit of an indication that the bulls are getting stronger here again on this daily chart. On the bottom of the chart, percent R crashed below the 50% line on Thursday, but then quickly reversed that on Friday. So all in all, most of the indicators are telling us on the daily chart that this market is still likely to go higher. When we look at the monthly chart, we saw that the market was indicating a bullish trend. The weekly chart likewise. The daily chart, although we saw a pullback on Thursday, is still also quite bullish. Well, that's it for this weekend. Thank God I was able to get through with my voice. It's getting a lot better. I would say we keep a close eye on the stocks we own, because we are bumping up against resistance here, and we are likely to see some more volatility in this market. So be careful with what risk you take, and I'm going to do the same. Have a nice weekend.